goes down, a very mediocre news move, if you know what I mean. It wasn't exactly what I would call a burst. And it struggles plenty hard to hit the first target. Plenty hard. I mean, it really struggles. And it does, though. It hits the first target, 50 seconds, almost hits the second target, and it reverses. Look at that. Comes close. And now gold goes back on its merry way up. I'm guessing that Mark got in somewhere there, somewhere around there. And gold just kept, it made a really nice move up after the news. And it was trending up. Now, the other thing I wanted to show you, University of Michigan last month would have hit the first target, in my opinion, last month. But this is also a very mediocre performing report. This was 2 months ago, February. February, we traded live. Oh, no, never mind. February, we traded live. And I was only trading one contract because this report's been so mediocre. And it's a stop. Okay, it doesn't work. February is a stop. It filled us on the wrong side. That's the problem. By 2 ticks. Okay. 2 tick fill on the wrong side. And then January was a small winner, I believe. We traded live. January, it hits the first target, and I did not want to stay in the trade. Or, you know what? I thought I looked at this. No, you know what? Okay. No, I didn't trade it live in January. Looks like it would have. It filled. Looks like it hits the first target in January and then it flips back up. Okay. And then December. Hits the first target and then it kind of sat. So I just took a small profit. It never hit the stop up. Now watch what happens. Something crazy happens, and you have no idea this is going to happen. But I want to show it to you just because I don't want to hide anything. Never hits the upper stop. And then it just moves crazy as if it was responding to the news then. I mean, that was just a bizarre, strange move. And then November, I just want to show you the moves because there's not a single move that I would call a nice news move, like we got out of CPI or like we got out of bonds or like we got out of a good API or a good natural gas. All you do is get stuttering in this trade, stopping and fits up and down and just painful. So it hits the first target in November and up and down again. Same kind of painful price action, right? painful price action. Then one more in October. I just want to show you a whole bunch of them because there's not a single report going back to October. Now, I don't remember if October, what kind of, how it behaved. Let's see. I canceled it because there was no move. October was a cancel, official cancel, because there was no move. And the news had a nice offset, just didn't respond. So there was nothing to get out of that trade. Okay, what's my point? My point is you've got like 6 months worth. Chantal, we weren't streaming today. I didn't send an email. Remember? Because I thought you weren't going to be here. Or there was a possibility. Or maybe we said, I never sent the email. You can leave it on. You can leave it on. Okay, I'll see if anyone's there. There's a few folks there. Sorry, folks, we had a little confusion about whether we were streaming today on YouTube. So I apologize. We are streaming. So what I was saying in the trade room is, so trade room members and folks on YouTube, there's been no decent gold move on this report. We did some testing of other setups. The RTY looked like it was interesting. And then I tested the RTY on another report that we tested where it looked interesting, and it really didn't trade well with live market data. So I don't yet have faith that the RTY is a good answer, to be honest. But I'm going to set up our test, and then I'll tell you something crazy that I was thinking. So our RTY test on Preliminary University of Michigan, and one of the reasons why I'm not that, it's got a big bracket, 15 bracket. Targets, I would do targets of like 8 and 15, 8 and 18, somewhere in there. 8 and 15. Let's do 7 and 15. And we had a stop of 18. Okay. And this is just a test. I don't know how I feel about the RTY. So I'm using targets of 7 and 15. Okay. Entry time of 59. And folks, I'll say it 20 times. I'm just testing this. We've never traded the RTY. This is not something that I would recommend doing live without doing some tests on live market data like we're doing right now. Okay. I'm not trading it live. Okay. So here's something interesting, though, that I discovered. So Chantal and I had a discussion about the trap trade, but I couldn't get her settings to work. Her settings just weren't working for me. So we had a big discussion. Then I decided, well, you know what? Let me set up my own trade. So I set up a couple of trap trades with the University of Michigan with small tiers because the trade doesn't move that big. You're watching this clock. I had like 10 seconds of preparation, and the concern that you have with preparation time is your orders are on the chart 10 seconds before the news comes out. You don't want to get filled early. My tiers were pretty small. They were 7 and 13. And every trade gave me an opportunity to profit. So, the question is, do you want to risk $240 on a trade this mediocre? You could trade one target, one tier. You could make your tier 13 ticks. If you get filled, then, you might have an opportunity to get a reversal. And what I was testing was different preparation times, and it worked regardless of what the preparation time. So a 10-second prep time is probably okay on this trade. I don't like going long like we used to do on trap trades. So this was February. The first one we were looking at was January. February didn't fill, okay? So 2 out of 3 filled. I tested 3. February filled, did not fill it after more than a minute, okay? I'll usually give a trade a minute with a trap trade. You want to, it's if it doesn't fill after a minute, then you have to worry that you're not getting the news event to give you what's the word I'm looking for? Impact. Okay. Now, this trade, let's be honest, this trade has been so. I was going to cancel both trade rooms this morning. That's how mediocre this report is. We're struggling to find a setup that's good. 2 out of 3 trap trades, that's not, a lot of testing. It's not, it doesn't give me that much confidence to trade, to risk $240. It just doesn't. The interesting thing is, gold traded, even with gold being up, and it's now trending down since 9 o'clock. It was up quite a bit more when the housing report was out. It's just gold. Sometimes it trades the way we expect. Sometimes it doesn't. In the past month and a half, it's had zero consistency in terms of respecting the direction it used to respect on events. And what that means is when gold was respecting direction, if there was a really good trade, gold would go down, and you could count on it. If there was a really bad trade, gold would go up, and you could count on it. That's not the situation today. It's just not. So, things are what they are. You have to trade the way the markets are behaving. So, just to go over this week, all right? Let's go over this week real quickly because it sort of plays into what you're going to do today. It's funny. I don't remember if we made money on the bond auction. No, the 10-year bond auction was our worst trade of the week because our setup was incorrect. Okay. We will never trade a bond auction again with a 2-tick bracket. Not never, but not in these current markets. The bond auction was my only losing trade this week. We made money on CPI. We had a very nice 30-year bond trade, and we had a small winner on API. Crude oil for many members was a big winner. I was flat. The beige book, it was, in my opinion, too dangerous to trade. Ironically, the setup worked. And Australia employment was a small winner, 4 to 6 ticks. Retail sales, I decided not to trade because there was too much news. The trap trade setup would have been perfect. And the breakout worked for target one. Natural gas was a winner, and we didn't trade building permits and housing starts. So we're up about $500 this week, trading conservatively. That's about what I'm up. So do you want to risk $200 on a very poorly behaving report? I think I want to keep my profit for this week and see if my trap trade works. Of course, I mean, I really think it's going to work. I think, do you want to, is anybody interested with the quality of the report? Is anyone interested in trading this? You saw all the moves with gold. 1211 is a winner. All right. So you do have 3 out of 4 target one winners. Okay. That means 4 ticks, 4 to 5 ticks, and then you have to get out. My gut feeling is I would rather look and see if a better setup exists. Our current setup it's just weak. It's weak. Now, if gold starts to trade better, the current setup, it's a little better. It's never been a big moneymaker, this trade. It just hasn't been. So my feeling is I would rather see if my testing makes any sense. So I'm going to keep my profit from the week. I'm not going to throw the money back into the market today. I just don't think there's a strong enough reason. If this was the jobs report, I'm trading it. If it's a bond report, I'm trading it. If it's oil or gas, I'm trading it. But Preliminary University of Michigan, you've seen the last 6 months. It's weak. It's been at best a target one trade. I'd rather test my trap trade setup because if it works, I'll trade it next month because it'll be 3 out of 4. So here's how you set the trap trade up. But I'm not that interested in throwing money away on a Friday to test a report that I'm really not certain that I have the right setup. I'm not 100% that my setup is the right setup. I think it's going to work. So let me show you what it is. I'm trading 2 contracts total. So position size 1 and position size 2 both get set to 1. The bracket center is priced at the time. Wait for spike is default at 5. Average bars is default at 10. Stop loss position should be changed to last fill price. And my stop is 12. Tier number 1, which is order number 1, is 7. And order number 2, tier number 2, is 13. The entry time is always the time of the report, and I'm preparing for 10 seconds. Okay? 10 seconds of prep. That's the trap trade setup. Make sure the stop is correct. 12 ticks. Always double check your stop on the trap trade software because it changes the stop sometimes depending on how your tiers are set. So always double check your stop. So that's the test that I'm doing this morning. I'm testing the trap. I'm also in the middle of getting the programmer to do a small update to the trap trade to make it easier to trade for us. And I hope to have that done shortly. So if somebody out there wants to simulate or trade, if anyone's trading the regular setup live, I'd like to know what happens on the breakout. You can't do both unless you have two separate accounts. So if somebody wants to be a nice person and trade the exact setup simulated, if you can record it, even better. But so what I am testing is a trap trade on University of Michigan. What a trap trade expects is price to go up and down. It fills you in the opposite direction if it goes up or down. So in other words, if it goes up, it shorts you. If it goes down, you go long. But the key is that it's basically a reversal trade. So if you get a burst breakout, you're going to get stopped out. So if all of a sudden today, University of Michigan decides to act the way it acted a year ago, where it would just be a straight ahead solid move in one direction, then the trap trade won't work. But Michigan, I don't know that Michigan's been doing that for a long time. Now, gold's a little volatile, so it makes me possibly want to shorten my entry time. I'll show you what I mean. In other words, I don't want my orders on the chart very early. Right now, I have 10 seconds early. Gold's darn volatile. I'm just going to do it 3 seconds early because I don't want to get filled early. I want the trade to take place at 10 o'clock. And it's sort of like because my tier is 7 ticks, it's like a 7-tick bracket. So if gold moved 10 ticks before 10 o'clock, it'll fill me, possibly on the wrong side. Okay. Now, all of a sudden, you've got a fairly strong downward trend in gold. Even though gold is up, it's down. It's definitely been trending down for almost an hour. Okay. After the market opened, it's trending down. Let's see, 9:30. It's really restarted. The market opened and gold kind of consolidated to the upside a little bit, but now it's trending down again. But the point is, some of the reports are really not trading well. And rather than just continue to do the same thing over and over, we're spending a lot of time testing different indexes, different setups. You know, that's why you see the CPI with the NQ. You know, we think we may have found a safer gold setup just by increasing the bracket. It's why I'm looking at the RTY here. But I'm really going to pay attention to the trap trade because trap trades that work really have a strong opportunity for great profits. So, University of Michigan, if someone, you can tell if the breakout is going to work. You can't always see every little move with the naked eye. So, RTY filled very fast. Okay. The news is a little mixed. Okay. I'm just letting RTY do its thing. I'll give the trap trade a minute. It hasn't even moved. So it moved, it filled both tiers. So now you want a downward push. If it just pushes up, you're going to get stopped out. Okay. Now the RTY, we'll watch the video and see what it did. Now, this is why I was going to be very careful. I'm not 100%, this might just keep going up. The news was negative. So we'll watch. It filled both tiers. Okay. I'll probably, it looks bad. I'm very happy I didn't trade it, to be honest, because right now it's looking bad. Doesn't mean it's not going to work. RTY, we'll look at the video in a minute. Doesn't look great. Doesn't look like it worked, but sometimes in simulation you can't tell. Trap trades, when you test them, they're very accurate because they're moving in opposite directions, so there's generally not slippage. Mark, I mean, I agree with everything you're saying. I did not want to throw my profits back to the market today on a report that is very iffy. Okay. Did anyone test the breakout on gold? I was not watching it that way, but we'll watch the video in a second. So you could see, though, the trap trade is interesting. Gold may, what we want is we want it to continue on its downward trend that it started making an hour ago. But, you still have a stronger upward trend, and that's working against you today. And the news is mostly negative. Okay. The strongest parts of the consumer news is negative. So I'm so happy I didn't trade it. It's a test that my settings did not work. Okay. No harm. Nothing is lost. Let's look at the video and see if we can analyze what happened, though, on both setups. Did anybody trade the report in sim or live? Just out of curiosity. Let me render the video real quickly. And then we'll look at it and see if we can tell what actually took place here. All right, so here's the trade. All right. Let's check the RTY first, right? Maybe the RTY was a cancel because it was so slow to fill. Let's see if that, so we're going to look at the right chart first. Okay. RTY. There's our bracket. It was a 15 bracket, if I remember correctly. I would give it, the news is out and there's really no reaction from the RTY. That's not a trade reaction to news. It's just not. That is not a reaction to news. Okay. That's an RTY just continuing to go down because it was trending down. So I would cancel the RTY. It was over 30 seconds. I would not have traded that. I'm telling you now, I personally would have canceled that trade. It went down, totally reversed, was just a complete, not a good trade. Let's go back and watch the gold trap trade, but let's look at it first as a breakout. So our orders would have gone on the chart right about here. So here would have been our breakout. And the setup, if you look at the setup, the bracket would have been about 5 ticks. Okay. It's a 5-tick bracket. So the entry would have been 1772.50 for the short. All right. 1772.50 for the short. 1773.50 for the long. Okay. On the breakout, because it was a 5-tick bracket and our orders would have hit right about 59. So very close to where we are now. And it gets up to 50, 70, 80, 90. So maybe you're going to get, looks like you'll get target 1. Okay. Again, looks like target 1. Or let me just see how far down it goes. So I don't think it would have stopped out. So I think the breakout would have worked today. Of course, because we didn't take it. Okay. The breakout would have worked. So who knows? Maybe, University of Michigan is just a 55% trade where every now and then, you'll get 2 targets. Okay. I mean, and that's not an unreasonable way to look at it. But today, it looks to me like the breakout would have worked. Okay. Looks like the breakout would have worked and the trap did not. Because really, if you look, even I think my entry is early. I think that our orders would have gone on the chart at around 70. And let me show you why. Our orders would have gone on at 59 or 58, according to the DMM, if you follow the DMM exact. So orders, no, so our orders, so I'm about right. Our bracket would have been 1773.50. And the breakout would have worked. The trap trade, it just never reversed. Okay. It didn't reverse enough. It filled, it hit both tiers, and it never comes back so that you can get a profit. It just keeps heading up. And that's why the breakout worked today. And the trap trade never got below your entry. So it tells us, you look at all the trading that this report has done. And the irony of ironies is you had 2 mediocre reports, 1 very bad report and 1 mediocre report, and both of them could have given you a winning trade. Even the building permits. Here's the building permits video. And if I don't trade, I want to make sure what I should do the next time. But it seems to me if building permits trades by itself, it might be that we could still see if gold will be tolerable. Today, on a day when it had a very big trend, it still looks like, as you watch here, it fills short. The stop is plenty far away. It never hits it. And it hits the first target and gives you plenty of time to get out, break even with target one hit. So a big $30 trade to $40 on building permits. That's what you could have expected to make, being honest. Okay. And then really, it looks like University of Michigan just gives you a trend trade that happened to have news in the direction of the trend. You had negative news. Gold continued its trend up, and the breakout would have worked. So it's almost like the testing doesn't really tell you anything, because this is what gold has been doing. It's not so much that it's been reacting to news as it's been following a trend. Okay. So, but the interesting thing is, it would have worked as a breakout today. It did not work as a trap. I'm happy I didn't trade it as a trap. And when I do testing, and when you do your testing, you should always have 100% confidence in your testing before you move your testing into a live trade. Having one or two winners, not testing, 4 to 5 months at least, or 5 reports at least, is a mistake. Just testing 2 or 3 generally is not enough information to base a serious live trade on. You don't want to give the market $200 and a chunk of your profits from a trading week where you made money just to prove a point. You want to risk your money when you know your testing is ready to go live. Okay. And we saw that today. I was very honest. I did not feel 100% confident in my testing. Obviously, if this had been a really strongly behaving report, there'd be no need to test. But you saw with your own eyes 6 months of pretty mediocre moves. And then today you get a good move. So you have to scratch your head and say to yourself, what was different about today? And, you can't go back 6 months and say these markets are anything like they were 6 months ago, because they're not. These markets are like 2-month markets almost. They're unique unto themselves for 2 months. And what we know about the recent markets is gold is following trends that it has before you get to the news event. Sometimes it'll react properly to the news. Often it will fill you on the wrong side and continue in a move to the trend. And today you had the good fortune, if you traded this as a normal breakout, you really had a gold trend trade. And what I mean by that is gold was trend, even though gold was trending down while we were in the room, the ultimate trend was still up on the day, and gold got a boost towards that direction with negative news, possibly, which normally would make gold push up. So maybe that was just the little catalyst that gold needed to go back to its upward trend. So I hope so. Mark, define your definition of the opening range. The first hour, first half hour of gold. What's your opening range? Oh, the first 3 minutes after the gold open is your opening range? Okay. So what Mark is saying he does is he uses um, he looks at the first 3 minutes after the gold open. And if gold is above that pricing, that high, then he considers it an upward, that gold is still trending upward. If gold is below that, then you're considering that gold is trending down. Is that correct? It was below today? All right. Now, for me, what I'm looking at is the trend of gold from 6 p.m. That's where my number comes in here. This 112 ticks is based on 6 p.m. the night before. Lots of markets open at that time, and that's a very good time, in my opinion, to start looking for a trend. And if there is a stable, steady trend from that time, it can be pretty good in giving you an idea of a trend. Now, look, everybody uses, and that also makes trading crazy because everybody uses different time frames for trends. Right. And as Mark says, the key is just be consistent with it. In other words, don't have one trend at 10 o'clock to 10:30, then the next day you do 9:30 to 10. Use the same settings for your trading so you have a consistent method to compare results with. All right, folks. So, am I disappointed? I would, of course, rather make money today, but sometimes you have to spend a little bit of time learning so that you could make money the next month. It is the nature of trading events. And that's why I do what I do. And look, I don't always do the right thing. And I'm the first one to admit that. So if there's any questions, I'm happy to stay and take them. There's no questions. If you want to get a quick look at next week's schedule, it's not a busy week next week, but there's always some interesting trades. Let me see if I can find the schedule that I made already. Next week is the 18th. So I'll tell you what I think are the interesting trades. We always have our oil and gas trades. Netflix earnings, Tuesday. That's always an interesting possibility. Canada Bank rate statement. We're going to work on that for a setup. I know there's a setup there. 20-year bond auction, we never know. It's not as good as the 30s. It's not as good as our other auctions lately. We have existing home sales, natural gas. New home sales, I don't have much faith in. Flash manufacturing, take a serious look at that. Existing homes, Thursday, unemployment claims. It really hasn't been doing much. When it trades with other things, it's been better. It's been better. So it's not the most exciting week next week, but we've always got API. The Canada bank statement is interesting always. Now the Euro main refi rate has potential to be an interesting trade if you get up early. That's a 7:45 trade. Let's take a quick look at NQ because we were testing NQ on this report also. So if you look at 10:01, it's a tricky candle. The NQ has tremendous volatility on this report we found. You have to actually really look at your range charts to make sure whether or not you would have had a safe entry on the NQ. It would totally depend on whether or not where you got filled and what your bracket was. Now, we would have used a 25 tick bracket on the NQ. This candle, not counting the wick, just for fun, 64, 6. It's way bigger than 25 ticks. So, totally have to see on the range chart. When you look at a range chart, let me just show you really quickly. So here's what a range chart, if you look at the NQ on the range chart, right? And our orders. So if you look at 10 o'clock, because that's when the trade was. So our orders would have gone on the chart somewhere around here. Even if they went on at 10 o'clock, you would have gotten filled short, most likely, right? Look at that 3-second move. You wouldn't have got filled at the top. You probably wouldn't have got filled till somewhere in here because it changed direction. So if you got filled somewhere in here, 61, it got down to 58, 12 ticks. So maybe, and then the NQ started going up. Maybe you could have had a target one trade, but it looks to me like it might not have filled you in the right direction today. Now, the problem is also you would have had a 25 tick bracket, right? So if you were getting filled somewhere around where I show you, it might have even been more trouble because the bracket was too big. So if you look at 10 o'clock again, and you think about that bracket size, it may not have even worked at all. It might have filled you at the bottom. Once you hit that bracket, it's a lot of ticks. So in this area, our orders hit the chart. We have a 25 tick bracket. So somewhere around 60, you might have got filled. There was not a lot of room for profit, but you would have gotten filled, it looks like to me, on the wrong side. Not so sure that would have been a winning NQ trade. After the news came out, the NQ just started moving up. You can't say it had anything to do with the news, right? Because the news was negative. So I'm not so sure the NQ for this particular trade is the right setup. Not so sure. And we knew that going in because it was so volatile in our testing. We didn't want to really trade the NQ on this particular trade because of the testing. All right, folks. Hope everyone has a nice weekend, and I'll see everybody in the trade room next week. Okay, folks. Take care, everyone. See you, Mark.